Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is February 4th, Thursday, February 4th, 2016, and I wanted to give a quick update as to what's been going on in the market. Now, typically we'll do this every weekend, but I just thought I should come in here and give a quick update as to what I see in the charts and give you guys an idea of what it's or could happen. Now, that being said, I also have to let you guys know I am not a professional licensed financial person, so please make sure that anything that I say today is only regarded as education and entertainment purposes only. Okay, if you need the advice of competent financial advisors, please make sure you go out and seek one. I am not one of those people. I'm just a guy who looks at charts and makes educated guesses like what I see and where the market is going. Okay, so that being said, so the market closed today, pretty much fairly flat at $2.92 on the SPX. Okay, but the reason why I wanted to bring this was we had this big drop that took place in January, and then the market seemed like it was ready to start rebounding back up, but it's been having some difficulties really going up. It's just been really choppy, okay, and it made me kind of look at it again and say, well, what's going on? And as I was looking at this yesterday, I realized that we were forming what is called, let me write this down, a bearish flag pattern. Okay, we are forming what is called a bearish flag pattern. And so let me tell you what that is. A bearish flag pattern is basically a continuation pattern. All right. A bearish flag pattern is a continuation pattern, meaning that the prior trend before that flag formation began, whatever that prior trend is, that's what it will continue to do after it comes out of that consolidation. Okay. So this is the flag, and this top right here, oops, let me do this. From this top right here all the way to this bottom right here, this line, let me bold that a little bit. Go here, make it 3. Okay. This black line right here is considered the pole, all right? And then we have this right here. Let's do this. Okay. Let me zoom in a little bit more. You can see I'm connecting these lows right here. Why did I not connect this one and this one? I'll leave that for those who are actually my students. They know that. But just to suffice to say that that is the lines that we're drawing. And then we put something at the top as well. Okay. So we have a pole, which is this black line right here. And then what price has been doing is forming a channel to the upside, but it's really consolidated. Okay. And that's what we're looking at now. What do we expect the market to do? Pretty soon, we expect the market to continue to the downside, okay? And when it does, what would typically happen is the same distance from this top to this bottom is approximately what you would get once it starts going back down, okay? So, and that's just approximately, all right? The interesting thing is that we are on the verge of that breakout, okay? Now, if it breaks out to the upside, then we no longer have a bear flag. But if we break down to the downside, you want to start buying. And what you want to see is a close below this line right here. Because if we go back to the very bottom right here, we see that even though price might touch that line or go below it like it did right here, or in this case where it went below it, it keeps on coming back above it and staying above it. So one of the things that you can also do is say, actually, let me do this. Let's remove one of these lines. What you can also do is actually bring it to wherever the close is, right there. Okay. All right. So if you put it at that close right there, so anything that closes below this line right here is basically our clue that the market is ready for the breakout to the downside. All right. Now, this. Okay. Just to be safe, you can have it over there. If you want, to be a little bit more aggressive, you can put it somewhere around it. So anywhere between these two lines right here. But if we definitely get a close below here, we are looking at prices to really start going down. But more than likely, really the first line is what we should be looking at. So let me remove that second line. This line right here is what we should be looking at, because price literally could not close below this line, even as early as the last day of the drop that we had. Okay. So that being said, if we duplicate this line right here and we bring this line right here, we can see the breakout. Now, I like to put my lines at the top of the channel or the top of the flag formation. Some people like to bring their lines at the bottom of the breakout. But just to be conservative, I like to put it at the top. Okay. So if we have a breakout and we're looking at 80% of this move, what we can expect is price to come down somewhere around here. So if I was to take this line and come down here, all right, if I wanted to get about, say, 80% would be somewhere around here, okay? So maybe even where this line is already, all right? Now, I'm not even sure why I have this line on here, but I'm pretty sure it's due to something in the past. Let me just double check that real quick. Let's see. Go back 20 years daily. Where's this line coming from? Okay. So we are looking at this line coming from back here. Okay. So somewhere around here is what this line is representing. And that is where we are right now. Okay. So somewhere around this area, we should expect price to drop down to if this bear flag does take place. Now, let me do something real quick. All right, and let's go to the daily chart right here. All right, so this is what we're looking at for the bear. Now, it's interesting to note as well that in a bear flag, once we have the lowest low that takes place, if you start counting from that day, it typically takes anywhere between 7 to 21 days, or I should say 7 calendar business days to 15 business days, which is approximately, or let me rephrase that, 5 business days to 15 business days, all right, which is each candle is considered a business day, or 7 to 21 calendar days, okay? So in this case, we have day 1 right here, day 2, day 3, day 4, 5, 6, 7, 8, 9, 10, 11, 12, okay? So we have about 3 more days to go. So sometime by the end of next week, latest, we should see a breakout to the downside, okay? So we have, if you look at the numbers in that box, we have 15 days, 12 bars. So 12 business days, 15 calendar days. So we can go up to 21 calendar days or, 15 bars. So either one. So if we go up to 21 calendar days, we're looking at maybe another 7 days from today, or 6 days from today. So we're looking at next week Thursday, next week Friday. So sometime between now and next week Thursday and Friday, we should see the market drop. But my thing and what I'm saying now is, if we see a close below this line right here, okay, this uptrending line right here, if we see a close below that, that is your clue that the market is ready to go down for the next leg, okay? All right, so that's what I see on the market. Let me give you an example of another chart that just did something very similar to that, and that is this company right here, okay? So if we look at this, it did the same thing. It came down, all right? That was the pole, and then this is the very low right here. You start counting 1, 2, 3, 4, 5, 6, 7, 8, 9 days, all right? 9 days later, and then now it's going lower, okay? And the interesting thing is, again, it would typically take out this low right here. So if we were to draw a line right here, all right, connecting these, the close, the body, not the wicks. We're looking at the body. If we took this body right here, connected it with that body right there, we can see that when this broke below that line right here, that was our clue to actually start shorting this stock again, okay? And so we can expect it to go down just as much as what we saw right here. About maybe, anywhere between 70–80% of this move, if not the same or more. Okay, so it all depends on how bad the market looks. But when I look at all the indexes, it's pretty much setting itself up the same way too. Okay, here's the Dow doing the same thing as well. All right, we can draw the same exact line like that. Okay, and the Dow has been in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. Okay, we are in a bearish flag formation. A bearish flag formation. Let me duplicate this, bring this up here. All right. So what this is doing is a bear trap. Okay. It's making people think it's going bullish, and it's going to turn right back down. Okay. Just look for the close below this line right here, and that's where things will start going down. The Russell is the exact same thing as well. Okay. We have our lines right there to this down here, and then we can take this and say, this is what we have right here. Okay, so even today, it's still closed above that line right there. What we're looking for is for price to close below that line. Okay, when price closes below this line right here, we can expect price to go. Now, interesting thing is, up until the day that happens, because again, we have up until next week for this to happen, we can still see price come all the way up here. But, it'll come up to this line and come right back down again, just like it did right here, okay? But you'll see those type of stuff happening. So whatever bullishness we see in the market over the next week or so, I will consider it suspect until I see it really close above this line right here, okay? And then lastly, the NASDAQ is doing pretty much the exact same thing as well. We can take the lows right here and connect it right there. All right. Now the NASDAQ is, now closing below this. So this is very interesting, and this is, where I'm now looking at this and saying, do we have the first clue that the market is ready to start turning over? So I would not be surprised if tomorrow, which is Friday, the market starts dropping big, or early next week we start seeing the market dropping big. Okay. The NASDAQ is already leading this, and it's showing us signs that things are not looking so good. Lastly, I want to show you the transportation index. All right, and this is a great example of what I mean by what I meant by the fact that you can see it go all the way to the top, but at the same time, it would just stall there and not try to go higher. Okay, so here's what we're looking at. All right, and here's the transportation index. It's really just kind of like staying right there. We could even move this, move it down to somewhere like this. All right, so we are in this range right here. So chances are that it would start turning back down again. We'll have to wait and see. So on the NASDAQ side, on the transportation index, it's showing that it's strong. On the NASDAQ, it's showing that it's weak. We'll see what happens, but if I was to trade this, I'll be prepared for the market to close down below these lines and start heading down lower. All right, that's it. Remember to trade on the right side always with confidence.